and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest returning today is Todd Horwitz, who's the chief strategist over at Adam Mesh Trading. Todd, thanks a lot for coming back on the show.
Always great to be here.
Thank you very much. Well, I think you were on about a year ago. You made some pretty bold calls. I think you were a little bit bearish on gold and commodities at the time. That's worked out pretty well. How do you see things right now?
Well, you know, if it works, don't
Stay
change.
with it.
I think that commodities, I think that gold is still going lower. I think we're in a downtrend.
Why is that?
Well, first of all, gold, in my opinion, is not a hedge against anything. You know, people want to say, well, it's a hedge against the market, a hedge against inflation, a hedge against anything. To me, it's nothing.
Really?
It's just another commodity. That's my view. It's like soybeans, oil, it doesn't matter. It trades basis. The technicals of the chart show me that we peaked up at 1937, and we're now in a downslope. So if we're going down, I'm not going to try to change the trend. The trend is lower.
You must have a target, though. Where do you think it could go, let's say, in the short term? You think we can break down below 1,500?
I think we do. I think the first test will be at 1529, which was the most recent low. I think we get a little bounce over there, but I think we maintain the down composure, and I think we get into the 14s. I think we get probably the 1440, 1450 handle.
So you don't buy this idea that gold is another currency and it's a hedge against all kinds of calamity. You just don't buy that.
It's not. It's like the only thing, the difference between soybeans and gold is you can't eat gold. It's nothing. It's a
little chewy. It's a little tough.
To me, it's another commodity that trades. It has no value unless you can find a buyer. Paper money, fiat currency is accepted everywhere. It's exchanged. You can't always exchange gold bars.
Now, how about this story about central banks pumping up money and printing money so you don't pay any attention? That kind of hasn't worked out, by the way. But
I agree with you.
Right.
The printing money has not worked out. However, while all the fear and all things have been going on, what has happened to the price of gold?
Price of gold peaked, as you said, last year and has been going down despite ongoing efforts by central banks, not just the Fed, but the ECB and Swiss National Bank, central banks everywhere, to supposedly print money. Although I've explored that in depth, I think, here on this program, and I don't buy it myself. But so gold's been going down, oil's been going down. Is this also part of just a global economic slowdown, or is it that people are kind of pulling back from the whole commodity, hard asset theme?
Well, I think one of the things we have going on here is we have the overall strength in the U.S. dollar, which, as we know, these commodities are mostly benchmarked against the dollar. So overall dollar strength.
Is that surprising to you, the dollar strength? Because in spite of everything that we just talked about and that people have been really concerned with, the so-called money printing, the dollar, if you look at the dollar index, since the Fed really started to put the pedal to the metal in 2008, it's actually higher now than where it was back then.
Not surprising at all, because as we look at fear, if there's any fear, there's three things in the world that people go to when there's fear: U.S. Treasury bonds, U.S. dollar, and the U.S. Marine Corps. Okay, so and so you can see that if there is some fear, they're pumping up the value of the dollar, because who's got the best economy? It may be in trouble, but who's in the best shape? We are. Who's got the money? We do. Who's the biggest? We are. So that's where the money's going to go right here. So I see that's how we're taking care of some of the fear.
So do you think that dollar trend is going to continue? And if so, I guess that would translate into, like you said, the continued bearish trend in commodities?
I do think the dollar trend is going to continue. I think you'll have some peaks and valleys. I believe that you'll get a little sell-off in the dollar here. The dollar index is right around 82 right now. I think there'll be probably a little bit of a sell-off. I like the 81 level last week. I think it's a solid level to look at, but I think we're going to continue to work our way higher. On this whole last run, we're making higher lows, which, as a technician, looking at higher lows in a chart is important to me.
Now, what about the U.S. stock market? I mean, is that kind of impervious to this fear? If there's fear, wouldn't that be seen or reflected in U.S. stocks? But yet, they're holding in pretty well.
They're holding in unbelievable, and it's surprising to me that the market has been able to hold so well. In fact, we went from a recent downtrend just a couple of weeks ago where we poked our way all the way down, and now we're making higher lows in the markets again. So it is strange, but again, it's a quirky thing here. You've got the Fed backing the market. So as long as the Fed says that we're not going to let it go down too far, and everybody kind of feels that way, that the Fed, if the market gets in trouble, what do you think is going to happen?
But the Fed hasn't been able to do anything about the economy. The economy is still growing at a sub 2% growth.
Terrible.
We have 8.2% unemployment, despite an increase of $3 trillion in bank reserves. The Fed's actions haven't done anything for the real economy, have they?
No, absolutely. They've done nothing. The Fed, as far as I'm concerned, I wish they'd go away. That's my opinion. Okay.
I think you have a lot of company.
I think the initial bailout of the banks the first time through, as much as I didn't necessarily agree, I think it had to be done. Now, all that's happening now is the very extremely wealthy continue to get wealthy. They're allowed to borrow money. They're allowed to borrow cheap money. The average guy out in the street wants to go buy a house. He can't get the mortgage at 3 3/4 because nobody's going to give him the bank because the spread's not big enough for the bank.
Yeah.
So we're in a liquidity lockdown as far as I'm concerned. And Ben Bernanke can talk all he wants about how there's plenty of spread for the banks. Just go look out in the street and see if anybody can borrow any money. They're not loaning because they can't make enough money on the spread.
What do you make out of the fact that corporate profits are just under an all-time record high? I mean, doesn't that seem odd given if you look out over the global economic landscape? You have Europe. You still have a very weak economy here in the United States with high unemployment. You have China slowing down. Yet corporate profits are at an all-time record high.
Easy thing to tell you. Okay, here. Caterpillar. Look at Caterpillar. I use them. They can borrow all the money they want. Okay, they know their ROI for every dollar is, let's say, 10%. They're stealing money at 3%. Okay, they've already cut their payroll down. Why?
Labor costs way
because
down.
they said to you, you want to work for me, you got to work harder. Okay, otherwise, and we're not going to replace. Okay, work harder. And what's happened now is, the Americans, we were a little bit spoiled too. With all the benefits and everything that was going on. Well, now what happened is this allowed corporate America to get rid of all the dead weight. And say, okay, you want to work harder. You don't want a job? There's the door. And that's what's happening. So they're getting cheap money, they've cut their labor costs, they're taking other things out of overseas, and here we go.
But is that sustainable? Because, I mean, the more people you lay off, or the fewer people who have jobs, who have income, how can they afford to buy the products of these companies? And therefore, how can profits continue to go up? Ultimately, don't they have to come crashing down too?
Well, they should. You would think that might happen, but however, there's a lot of money still out there. A lot of big companies, their suppliers are to a lot of big companies as well. So they're floating their own area up in the stratosphere right now. And with people, the unemployment picture is not, it's bad, but there's still people spending money. There's still people going out and still doing things. So I don't see that that's a problem yet.
All right. So give us your best outlook for the coming year? What are areas you really like, and what are areas you want to stay away from or more negative on?
Well, I think I'm negative on oil, which, is a good thing. But I think that, you got to be careful here. We got to be careful what we wish for. We're getting into a little bit deflationary period here. And it's a little scary. So when oil gets cheaper, but I still think I'm a little bearish oil, I'm a little bearish gold. I think the equity market, is going to be kind of range bound. I don't think that we can really push through. I think, back to your point, I don't think we can really push through to the next levels until we take care of some of these concerns that you have of labor costs.
You think the election is a factor?
I think that it's already priced, and I think that I don't think that there's going to have much of a factor here with the election, no.
All right, so range-bound stock market, a little bit more downside to commodities. How about longer term? Should we be looking to buy some of these commodities on this pullback? Is this a good opportunity for the bigger,
I think if you
term?
can find some good levels, I do. I think that, if you can buy oil, 70 to 75, I think it's probably a reasonable spot to buy. If you can buy gold in the 14 handle as a trade, it's probably a good spot to buy. I think the grain markets have gotten away from us here, with this dry weather. So, and they trade on their own minds, anyways, as you know, being from Chicago. So, they kind of fly around, and if it rains on LaSalle Street. So, but I do like the commodity space a little bit here, and I think the market's, I think the market's going to hold as long as rates stay low, and as long as the Fed is in control. The market's going to hold up here, and I don't see anything different.
Low rates, Fed in control. Todd Horwitz, thank you very much. Great to see you again.
Thanks for having me.
That's it for now, folks. This is Mike Norman saying so long. See you next time. Bye-bye.